Investing together is just better than investing alone. Angel networks, they're just incredibly difficult to operate and run. Are you the type of founder that's building an idea meritocracy, or are you building a temple to your own amazing self? Because the idea meritocracy is going to win out more often than not. A lot of entrepreneurs are sacrificing their soul to try to build their company. But once they've sacrificed their soul, the company typically goes with them. And so the spiritual and emotional health of the founder is so essential to whether the venture is successful or not. And we could say, hey, it's all about resilience, it's all about grit, and those things are important. But wouldn't we rather be able to build ventures that are long-term sustainable, high growth, high ROI, and the founder hasn't burned themselves out, ruined their relationships, broken up their family, lost all their friendships throughout the process? Like, is that really worth it at the end of the day?
Welcome to the Diligent Observer from PitchFact. I'm your host, Andrew, and every week I share insights and strategies to help angel investors make better bets. My guest today is Patrick Farrell. Patrick founded Potomac Angel Capital in early 2022 to bring like-minded angel investors together in the DC area to invest in mission-driven, early-stage entrepreneurs for mutual financial benefit, lasting impact, and meaningful relationships. As the executive director, Patrick is intimately involved in sourcing deals, hosting events, leading diligence, and serving as a trusted advisor to investors and portfolio companies. In late 2023, he moved to the great state of Texas. He lives in Austin to expand the Potomac Angel Capital ecosystem and plant a second angel network as part of a vision to enable flourishing entrepreneurial ecosystems in cities across the U.S. Prior to PAC, as part of the founding executive team at Nehemiah Security, Patrick was responsible for evaluating acquisition and funding opportunities to grow and eventually exit the business. Patrick was also responsible for operations at Nehemiah, where he functioned as an executive leader in legal, recruiting, compliance, security, procurement, and cross-departmental projects. Patrick is a graduate of Vanderbilt University with a double major in human and organizational development and economics, where he attended on a full tuition dean's academic scholarship. Patrick, thank you so much for being with me today.
Man, I've never had someone read my bio like that previously in full. And now I'm thinking I might have to revise it to be a little bit less lengthy and wordy. So thanks for going through and doing that. I'd like to be on the podcast today.
Well, I think it's a fascinating journey. One thing that didn't make it into your bio, though, that I'm curious about is, as I was preparing, I saw way down at the bottom of your background that you spent a summer, I think, or a semester on a boat. Tell me more about that experience.
Yeah, well, I love that you found that, because I could talk all day about semester at sea. So long story short, it's a study abroad program. Think of a converted cruise ship with like 500 to 700 college students sailing around the world. And long story short, on the ship, you're taking classes, you're going through like what would be a typical college semester. But then when you're off the ship and at port, you're exploring the world at large. So it's like study abroad. And on my journey, fall of 2012, we did, I think, 17 countries over 100 days on 4 continents, basically did a lap around the Atlantic. And it was just a formational experience for me, gave me exposure to so many awesome things, and obviously was one of the better few months of my life. So I can't say enough about semester at sea as it relates to forming and shaping people and college students and just the adventure that was. So love kicking off the podcast talking about SaaS.
That's amazing. I think most of us aren't able to do a 3-month cruise until we're retired. So I love that you accelerated that and knocked it off the bucket list in your early 20s. That's amazing.
100%. That was the right time to do it. And again, I got full semester of college credit alongside it and learned some awesome things, met some great people. So I can't recommend it enough.
I'm curious, what were some of the perspective shifts that you came away from that semester with?
I think this is a pretty general learning that most people get when they go abroad. Is this a sort of shared humanity? Like, you're looking at people in the eye from different cultures, different continents, different countries, and you recognize that to a large end, we all kind of share some of the same struggles. Now, obviously, different socioeconomic classes, different political struggles in these different countries, but ultimately you realize you're like, man, we're all part of something bigger than ourselves. which just opened me up, I guess, to be more open to new ideas, new perspectives, new ways of seeing the world. Not everyone does things the way that we do things here in the United States. At Potomac Angel Capital, we think about openness as a key value for entrepreneurship because there's so many new ideas and so many things you have to pivot and adjust and change. If you're only seeing the world through blinders or your own perspective, it's a lot harder to be successful. And so I think that shared humanity was a big piece. Also, just that like learning to love adventure and spontaneity and just kind of rolling with the punches when you're traveling and in a country that's not the United States, especially second or third world countries, things are going to go wrong. And so you got to be able to just maintain a positive attitude, think on your feet. Typically, those are when the really good stories pop up.
Okay, well, I have to ask, what's the story that you're thinking of right now as you say this to me?
So as part of semester C, again, we did a lap around the Atlantic on my voyage. You don't realize the Amazon River is so big that you can take a cruise ship down it. And so we, as part of the journey, went down the Amazon on the ship and docked in a city called Manaus. They actually hosted a few World Cup games when the World Cup was in Brazil, but it's basically a city right in the middle of South America in the Amazon rainforest. Long story short, there was a group of about 50 of us that rented another boat, kind of did a riverboat cruise to go further down the Amazon, really into more of the remote areas, really kind of experiencing some of the nature. And we were actually camping out in the Amazon rainforest as part of that trip. So the riverboat would come down, we'd dock, and we'd go out into the jungle and find a campsite and camp there. I remember going to bed that evening and feeling like my face was just itching, and I couldn't tell you why. We were kind of sleeping in these hammocks. We had these mosquito nets over us. We're right in the middle of the jungle. I mean, you can literally hear the pumas, 20, 40 yards away. And you're like, it's a jarring experience. But we had these mosquito nets and these hammocks. And so I go to bed. I'm like, man, my face is kind of itchy. But at the time, I had pretty bad allergies. So I was like, maybe I ate something or something like that. Meanwhile, I wake up like 3 or 4 hours later and I hear some commotion and I hear people talking about their faces itching and burning. And at this point, mine has gone a lot worse. And so I get up, we start talking, and all of our faces are just like, we're not having a good time. It hurts, it's itching, we can't sleep. Slowly but surely, 90% of our camp kind of comes together. And we're like, oh my God, our faces are like itching and burning. What we realized later was that the mosquito nets that we were using had been retreated in DEET. So DEET, like the mosquito repellent, the insect repellent. And so they weren't fresh. Typically, when you get a mosquito net fresh out of a bag, it's been pre-treated so that it's not going to affect you. But because they were retreated, meaning resprayed in DEET, and we were sweaty in the Amazon rainforest, our pores were open. We all had DEET poisoning in the middle of the Amazon rainforest at 3 a.m. And there's no cure for DEET poisoning. You just kind of have to you can wash your face, you just gotta let it ride out. And so that was one of those stories where you're like, you can either decide that that's ruined your trip, or you can deal with it and then try to enjoy the rest of our riverboat cruise. And to our credit, all the folks that we were with chose the latter and had 3 of the best days of our lives, even after barely sleeping and getting DEET poisoning together. So I know that's a long story, but that's the one I'm thinking about in terms of rolling with the punches.
Wow, that is literally a punch to the face at 3 a.m. Amazing story. Well, thank you for sharing.
Yeah.
So coming back to kind of your story from there, that was 2012. I'd love if you could give me a quick overview of your professional journey and then dial in a little bit more on the story of Potomac and how you guys came together with that organization.
Yeah, for sure. Graduated from Vanderbilt, moved back to DC, spent a couple years in consulting, and then joined as founding team member at a local cybersecurity startup called Nehemiah Security, which you mentioned. We had a family office behind us and a growth by acquisition strategy. So I ran the acquisitions team. We did a couple of acquisitions during that time. And then once we had them in-house, we had to integrate them and scale the people, processes, and systems to grow the business. And so that's when I moved over to the operations side. And that was kind of like an MBA in startups. And I did all sorts of different things. You heard it in the bio, but legal, security, compliance, things all over the map. Really gave me the entrepreneurship bug and a passion for startups and founders. So when that business had an exit in 2020, we exited to a larger cybersecurity firm in the DC area. I found myself really yearning to start my own thing to support entrepreneurs. And it was a long journey, but that led to Potomac Angel Capital, mainly because of the thesis of if we can get investors and community together, and have them invest together and walk alongside entrepreneurs that they invest in relationship, not only will we be able to fund and support businesses that are going to have an impact on the world at large, meaning we can help them get to the point where they're actually having an impact, but then we can support those founders spiritually and emotionally throughout the whole process. And so the idea was, let's do an angel network really focused on relationship to invest well, but to kind of spur on those relationships. And so I convinced a few angels that this was a good idea. They were crazy enough to say yes. And we launched in January 2022. Since then, we've done 17 deals across 14 companies. A couple of those were follow-ons. We've deployed just about $3.5 million in capital across a number of sectors and geographies, mostly here in the United States, but a few international as well. We've got about 25 families in the DC area that are a part of that. And to make a long story short, we recognized that we had a unique model for building community in the DC area, and we wanted to replicate it, add some capital to the table, see if this would stretch across other geographies. So I moved to Austin just over a year ago in August of 2023 to explore what that might look like. Psyched to announce that we'll be launching group number 2 here in Austin in less than 2 weeks. And so it's been quite the journey up until now. It's just been really fun walking with founders and investors and getting to learn the whole landscape.
You mentioned that a key distinctive about Potomac Angel Capital is this focus on community and relationships. I would love to hear why the relationships and the community is so important to you and how you guys uniquely evaluate teams, founders, and build relationships, given that it sounds like that's very, very important to you all.
Well, I think 2 reasons why it's important to us. And we would probably say that market founder tension is a both and. It's not a either or. But we would probably lean towards the latter, towards the founder in that equation. And 2 reasons why. First, I think more practically speaking, early stage entrepreneurship is a journey. It's incredibly difficult. And any founder would tell you that. There's so many things that are outside of a founder's control. And it's not that like hard work, dedication, putting in the hours doesn't matter. It really does matter. But ultimately, whether the business is successful or not, sometimes it's outside of the founder's hands. And so what we decided was, well, if that's the case, then some of the variables that we can potentially control is the person who's leading it, who can lead that startup through adversity, who can pivot, who can change. And so ultimately, in order to reduce the number of unknowns, we wanted to bet on founders who are going to be in the business longer term. And so, yeah, we certainly focus on the team, but we specifically focus on the leadership, the founding team and the CEO, the founder, as we think is an essential piece of that. The other side of it is one of our unique differentiators is that almost all of our investors are coming to the table saying we want to invest because we want our capital to align with our values and our faith. And so they're deploying capital really to say, how can we spur on love and good works throughout the world at large for human flourishing? And so relationships matter because I think it's part of our core value set, having a relationship with our creator and loving on others as we love ourselves is just a key piece of just how we think about the world at large. And so relationships are the essential piece of that connective tissue that we wanted to infuse throughout our investing. One of the things that we did in the early stage, just to kind of think through our process as it related to evaluating founders and kind of spurring on relationship, was me and a subset of folks did this little experiment where we said, based on our experience, what are the most important traits for entrepreneurship? What are the traits that make the biggest difference in terms of whether an entrepreneur is successful or not? And then let's rate those traits based on how important they are and how difficult they are to teach. We'll find the values effectively that are incredibly important and incredibly hard to teach, and we'll invest in those entrepreneurs and we'll teach them the rest. And so that's where we started. We came up with 5 values, core values that we really wanted to see in our entrepreneurs. And then we started learning how to, in relationship, how to evaluate whether our entrepreneurs had that or not. And also while we're doing the market side, while we're evaluating the business model, the traction, all those things that matter, we were also trying to get a sense of the founder. And so that process has shaped and evolved. It's behavioral interviews in some ways. It's reference checks. It's just getting to see the founder through multiple different situations. And so, for example, we recently invested in a company called Please Assist Me in the DC area. Stephanie and Rashad Cummings are the co-founding team. They're a husband and wife couple. They're amazing. The impact of the company is truly astounding. We won't go too much into that today for the sake of time. But as part of the process with them, we had some transparent feedback that we gave them very early in the process that would have been a hindrance to us being able to invest. And part of that was just practical, again, market side, like, hey, we need these deal terms to work. We need all of these things to kind of iron out if we want to invest. The other side of that was we got to see how they responded, and they stayed close to their values. They were really easy to work with. They were transparent and honest back to us. It just really established a sense of trust through the process as they worked through those issues with us. And yeah, it took us a lot longer to invest in them than I think that they would have hoped or we would have hoped. But we eventually found that they were committed to the mission and the impact like they said they were. We saw that in action indeed, and that they espoused the values that we were looking for. And so that wasn't an intentional thing that we did process wise, but it was just, hey, let's be transparent and see how folks respond. And that's one of the ways in which we've helped evaluate some of the companies we've invested in.
I'm curious, what are those 5 values that you guys look for, and what's the order of importance? Are they all equally weighted, or is one more important than the others?
Yeah, so there's 5. It's openness, boldness, positivity, commitment, and stewardship. Um, if I were to say if there's one or two that are more important than the others, it's openness, as we talked about, being that one that we really focus on. But all of them were at the top of the list in terms of how important they are and how hard they are to teach. And so, just real quick, openness, like receptiveness to new ideas. Are we going into this thing because we want to confirm our own bias and we want to be the hero, or are we humble enough to accept others' opinions and to notice when things are changing and shifting and be able to respond to them well? Ray Dalio talks about in Principles how he's got a kind of an idea meritocracy within his business, and that's really spurred on him being one of the more prolific investors. And so that's what we're trying to look for. Like, are you the type of founder that's building an idea meritocracy, or are you building a temple to your own amazing self? Because the idea meritocracy is going to win out more often than not. So that openness, I could talk about all day. How about boldness? That's obviously just like, how are we entering into tough situations? How are we facing adversity? Are we running into the storm, or are we running away from the storm? Because adversity is going to come in the startup world. So how do you approach that? Positivity, we chose that word very specifically instead of optimism, because positivity is just having a positive attitude, being grateful for what's there and thinking positively, versus an unhealthy optimism that pulls you into not seeing reality clearly. And so we thought positivity, we found that founders who are positive tended to see situations well and be thankful for what they had. And that thankfulness was a key factor in how they ran their business. Commitment, how much are you willing to sacrifice? And are you committed not only to the mission, but to the people that you're building this thing with? Because that commitment's essential for long-term success. And then lastly, stewardship. Hey, are you managing people and resources wisely? Do you have a track record of not being impulsive, not being erratic, but rather a patient, wise stewardship of what you have? We found that to be really important also.
Well, it's interesting as you're talking, the concept of launching a second location for an angel network that's a couple years old certainly fits into the openness and the bold category. As you're describing those things, I see reflection 100% in the way that you seem to be running the organization. I'd love if you could talk a little bit more about some of the lessons learned over the last couple of years since starting the group, and maybe what led to the decision to launch an Austin location.
Yeah, well, that's super kind of you to say. And I think there are a ton of lessons learned. One of the first ones is we learned, or I came in with the assumption early on that I had to build a world-class investing service, which is true. Like, how do you find the right deals? How do you diligence them? How do you build a process? How do you run events? That's a lot of work. And in fact, it's a lot more work than you think it's going to be. So one of the lessons was how hard it is to build angel networks. It's
Why is that? Why is it so hard?
If you're an institutional investor, that's a really difficult job in and of itself, because you're having to find the opportunities, having to evaluate them, you're having to negotiate, pick your bets, and then walk alongside the founders. Well, that's a really hard job to do in and of itself. Most of these institutional capital providers also then need to go find LPs to be able to invest in their funds. So like, they're dealing with a similar amount of issues. To do that at the angel investing stage requires all of those things. Plus you're trying to curate a community as well. It's relationships, it's events, it's admin, it's all sorts of different pieces and parts of like a small business. That funds don't have to deal with that. They do, but it's just a whole kind of unique beast in that way. And so I've found that getting all of that right and getting it running in an excellent way requires a ton of attention to detail, a ton of 100 little tasks on top of the 4 or 5 huge tasks that you have to manage. And so for angel networks, they're just incredibly difficult to operate and run. Obviously, you guys at Pitchback, you know that better than others. You're trying to solve that problem for a lot of these networks because there's just so many aspects that are difficult to manage.
Super helpful. Okay, I interrupted you. So back to the lessons learned. Number one is that it's really hard to run an angel network.
Yeah. Yeah. So that was the challenge. The lesson was once we got it underway and running, what we realized is a lot of the value was in the relationships in the community because investing together is just better than investing alone. And again, we had that relational focus to begin with. But once we kind of overcame that challenge, we learned the real lesson and the real value that we provide to our founders and to our investors, which is the people that are involved. I would say the other kind of challenge that we've encountered is it's a lot of herding cats. Angels have schedules, family, priorities, maybe other businesses that they're running. And they're angel investing typically with us. They're not angel investing as a hobby. They're angel investing as a sort of way of investing in culture making, shifting and changing, impacting the world in a positive way. So they're investing out of really the goodness of their hearts and trying to align their capital with their values, but that doesn't mean it's their main priority. It might be number 4 or 5 or even less on the list. And so how do you curate a community where there's enough buy-in from members to make it special, but not too much to make it inaccessible or too much of a burden? And I think that's a challenge that we've continued to work through even to today, is just to find that balance where people are bought in, but it doesn't feel like an extra task or an extra job. And to that point, a contact of mine named Grant Van Cleve, who was an early founder partner at Tech Coast Angels, one of the bigger angel groups in California. And he probably doesn't even remember our conversation, but he read me some stats. And what they had realized through their research at Tech Coast Angels was that if an angel spent less than 5 hours on a deal, they were unlikely to invest. But if they spent more than 10 hours on a deal, they were also unlikely to invest. So there's some sweet spot between 5 to 10 hours. And look, I don't know if that can be validated for everybody. It's not like, hey, well, once we get in those zones, we're totally no chance that angels invest. But what they really learned is that there is this sort of sweet spot. And I carried that forward and said to myself, well, how do we hit that sweet spot where we're enough engaged that people are bought in, but they're not totally overwhelmed or overburdened? And so I think that challenge is one that angel networks have to manage throughout the country.
And how did those lessons drive into this vision for launching another location, and why Austin specifically?
When we were thinking about expansion, one of the things that we realized again is we have this unique blend of investors who are trying to align their capital with their faith and values. We had this local, consistent in-person community that we were building in DC. There was a few different factors that made us kind of unique in terms of what angel networks typically look like. And I came down to Austin 18 months ago in 2023 for South by Southwest. And I just recognized that our core customer, that's faith-driven investor type, Austin was filled with those sorts of folks, but there was nothing like what we had here. They have some amazing angel networks, CTAN probably being the biggest and most notable. They invest incredibly well. But that unique differentiator that we had in DC, we felt like was missing here in Austin. But then secondly, just the entrepreneurial ecosystem was flourishing here. People have been moving to Austin for the last decade in droves. Big tech companies, the startup scene's really growing. It's by no means a San Francisco or New York, but it's becoming a top 5 location in the United States for early stage startups and investors. And so I saw this kind of confluence of broader market factors where people are moving in and our core customer being here, and thought, if we're going to try to expand this thing and see really where this thing can go so we can have more impact, bring more investors into the fold and invest in more companies, this is probably the place to do it. And so that's when I moved down about a year ago to Austin to really try that out and see if we can scale it to another market. And obviously, over the last year, we've been successful. There's been some awesome relationships down here that have led us to be able to start the network. And folks that are obviously taking a risk on me and our group because they haven't even seen the product yet. They haven't come to a meeting because the meeting's 1,000 miles away in DC. And so just really thankful for the folks down here who are believing in our mission and what we're attempting to do. I'm super thankful.
Patrick, I don't know if you remember this, but I'm pretty sure that trip to South by was actually where we met for the first time.
That's right. That was the same trip. So obviously there's been some longstanding relationships even outside of Austin, like between me and you, that were of intense value for me as well.
Yeah, that was a fun time. I'll never forget grabbing barbecue with you and Mike and just learning about what you guys are working on. It's very cool to see the growth since then.
Totally. And I was talking about some of the challenges and lessons of building an angel network when I met Andrew's pretty much fresh out of college saying like, hey, I want to run angel network ops. I want to solve this problem. I was like, man, all power to you, because I know how hard that is and want to be supportive for what you're doing because I lived through it. And if early stage angel networks, if you can get that process running quickly, if you can get those systems in place and really build out those angel network ops well in the first 6 months, it's going to be essential for success. So you're solving a major problem and facilitating investors investing into startups that need it. So thanks for all the work that y'all are doing.
Well, I appreciate the kind words, and we've certainly learned a lot from you along the way. Okay, Patrick, I want to come back to some of the things that you're seeing in the ecosystem. Or what are some of the trends or patterns as a angel network operator that you're seeing in the industry that you're excited about?
I think there are three. The first, and a lot of this is coming from my faith background, but the first being spirituality and entrepreneurship. We're learning that a lot of entrepreneurs are sacrificing their soul to try to build their company. But once they've sacrificed their soul, the company typically goes with them. And so the spiritual and emotional health of the founder is so essential to whether the venture is successful or not. And we could say, hey, it's all about resilience, it's all about grit, and those things are important. But wouldn't we rather be able to build ventures that are long-term sustainable, high growth, high ROI, and the founder hasn't burned themselves out, ruined their relationships, broken up their family, lost all their friendships throughout the process? Like, is that really worth it at the end of the day? And so I think there's been a broader trend, especially in the sort of like growth and personal development movement, where we're starting to recognize that like, hey, we need to maintain and take care of ourselves while we're working really, really hard. And so that trend, broadly speaking, I think is going to be much better for founders. It's going to help us be more conscious individuals as we deploy our capital and as we invest in companies. In general, I see this as an incredibly positive trend, and especially for folks like us who are trying to align our spirituality with entrepreneurship. So as a broader industry trend, I think that that's super important for us to look at. And we're finding there are a lot of institutional VCs that are now caring for their founders better and finding higher ROI. So it's a win-win across the board. Secondly, I think in terms of things I'm paying attention to, just the broader macro economy right now is so fascinating. We're in such an interesting place after COVID, just thinking through some of the wonkier bits and pieces of where we're at and how a potential recession in the future might impact early stage entrepreneurship, how the current election might impact how things go in the long run at the macro level, at the federal funds rate, public markets, lack of liquidity. How are all of these things playing into early stage investing? What should we be thinking about? I think typically investors do think about those things, but right now in particular, just even in the last 3 years of doing this seems like a very poignant moment to be considering some of that. And I think one positive that's coming out of that is over the last 18 months, really a trend towards, hey, how are we getting these ventures to profitability versus just growth at all costs? We want to make sure that our businesses that we're investing in are truly serving their customers and providing value. And so this move towards profitability is really, I think, in some ways, it's a survival thing. Like, hey, can we get to profitability so that we can extend runway? But it's also been a good thing for, hey, are we building on a foundation where we've really found that product market fit, where we really know our customer, where we can really sell and scale? Because once we get to that foundational moment, then growth is almost inevitable. And so it's like, it's a pushback to, I think, the fundamentals, which are really good for the VC community. And we'll build a better foundation or a better group of businesses for the future. So I think some of that macro stuff has actually already started to have a positive effect on some of the trends we're seeing in terms of startups who are seed stage and saying, hey, this round will get us to profitability and allow us to determine our future moving forward. I think that's been a positive shift.
Patrick, does Potomac Angel Capital accept a lower return than you think the typical angel might, given the impact focus and the culture elements that are important to your members? Or is it a both and, where you guys are prioritizing equal returns with the quality and culture shaping outcomes?
So basically what you're highlighting is the tension between potential impact and potential profitability. We don't see that as a tension. We are finding ventures across the country that are having excellent businesses with market rate or above returns and having intentional impact with their customers or suppliers or employees. And so we think we can have our cake and eat it too. That being said, to date, that's 90%, 85% of our portfolio has been business at US based teams in target markets with high impact and high potential upside. We have had certain opportunities where we feel like the impact is so outsized and so just kind of wild, where we've invested in things that we don't consider concessionary, but maybe just below market returns or potentially to get our money back in the long run. That's not our typical move. Again, we want to have our cake and eat it too. We're not a typical impact investor, but we do have a small subset of our portfolio that's aligned with that. To answer your question, we don't really see a tension between profitability and impact. We think we can find opportunities that are doing both.
I'd love to hear what are the things that you would change about how you went about forming and starting to attract the right kind of community.
I would say probably one of our biggest successes of our network has been the quality of the investors that we've had as part of the group, not only just in terms of capacity to deploy capital and willingness to do so, but also just in terms of character. I haven't been filtering a lot of folks out. I don't even think I've ever said no to an investor who's wanted to join our group. I think we've done really well, whether we fell into it or we just kind of learned it along the way. It was just curating a community in a space where we're like, here's what we're about. And if you want to be a part of it, this is the sort of values that we espouse. And actually our core values are the same values that we look for in entrepreneurs: boldness, openness, positivity, stewardship, and commitment. We hold our investors to that as well. I think we've done a great job of curating a community where those types of folks opt in. And that's a huge testimony to the type of angels that we've been a part of. We just built a culture that I think is really bar none, and built an atmosphere around it that leads to flourishing of relationships. I would say maybe one of the biggest failures is we at one point had an opportunity to invest in a later stage company. I don't want to name details. That was Series C. Again, it was the opportunity that the broader market of angels were not seeing. So we had a few investors that did invest in that company, but it was way outside our thesis. Later stage, we didn't really have a relationship with the founder or the team. We had no influence over anything that was going on. We just thought it was a good investing opportunity. We learned our lesson because to date, of our 14 companies we've invested in, only one has failed. It was this one. It was the latest stage. It was the one that seemingly had the least amount of risk, but it was also the one that was most outside our thesis. That will change, by the way. In early stage venture, you don't go from 13 for 14. So there will be more failures. But the point being that we've been really successful in the early few years and have really continued to double down on our thesis and form and shape that well. And so if I were to go back to a previous me, I would say, hey, don't be afraid to say no to great opportunities because they don't fit your thesis or they don't fit what your group is all about. Being intentional about that will help curate the right people to join the group. It'll curate the right opportunities. And I think you'll find that you get better and better at something that you really focus on. And so that would be my one advice, is to not stray from that and to really continue to focus down on that, even when it's hard to say no.
Patrick, what are your favorite, like 2 or 3 questions to ask a founder to learn more about their openness or their boldness, or pick one of those values? What are some of your favorite diligence questions to throw in?
The typical list of questions is somewhat like a behavioral interview, right? Like, tell me about a time when. But I think you can actually learn a lot about somebody when you ask them more personal questions. Hey, tell me about your hobbies. Tell me about your daily rhythm. What do you care about outside of this? Tell me about your relationships. But like, learning those details that are seemingly innocuous can open up a lot of insight. I'm thinking particularly of a founder. We learned by asking all those questions that this person had just made an extreme sacrifice on behalf of his employees and on behalf of his business. That was outsized. Now, founders are always doing that, but in this particular example, again, we're just asking questions kind of about how they think about impact, life. Like, we're asking his team members, hey, how do you think about this person? And we just learn this gargantuan detail. And we're like, oh my gosh, this guy is exemplifying all of those values and really is who he says he is. And by the way, has put his money where his mouth is and his time where his mouth is. And that really spurred, I think, some of our investors to invest alongside them, because at that point we were kind of 50-50 on whether we liked the business model and liked the business. But once we learned that, it was a huge accelerator. In short, asking the questions that are personal and kind of seem innocuous, we get to learn a lot. I think one outgrowth of those sort of conversations is just you get to build trust and relationship over conversation. You really get to know somebody. And so I would say there's no easy path. There's no hack to like getting to understand whether somebody has those values or not. It requires relationship. And so being willing to do that work has been huge for us. At the end of the day, you get to know a founder. Let's say you don't end up investing. We have relationships with founders that we haven't invested in that continue to this day. Whether we're hopping on the phone with them once or twice a year or connecting them with people or whatever, building that established baseline of trust has been huge for the founders and for us in supporting local ecosystems. I think that there are many opportunities there where founders are coming back to us a couple of years later. Things have shifted and changed. Their character has been formed and shaped. And now we're saying, okay, maybe this might be a good opportunity to invest in now. And so building that relationship of trust is beneficial to both parties long term too.
It's not transactional.
That's correct.
Patrick, how can our audience stay connected with you and your work at Potomac?
Yeah, so the best way to do so is just to visit our website, www.potomacangelcapital.com. It's slightly active on LinkedIn. That's probably an area where we need to be better at, just kind of talking about what we're up to. We are very close to undergoing a rebrand. Spoiler alert, Potomac Angel Capital doesn't quite resonate in Texas as it does in the DC area. So we'll be rebranding over the next couple of weeks. But if you go to that website, we'll redirect to our new brand that's under process right now.
Fantastic. Well, Patrick, this has been wonderful. Thank you so much for taking the time to be with me today.
Absolutely, man. Love what you're up to. Thanks for having me, and looking forward to hopefully helping angels make better bets.